Aloha, everybody, from a very windy Maui. I tell you what, though, if you're looking for a bullish follow through, it doesn't get much more bullish than what we've seen. Following with our retake of the 50-day moving average by the NASDAQ, we held the 50-day moving average. We started a breakout on the 10th, the 11th. On the 12th, we broke out. And on the 13th, we got quite a confirming follow through to the overall breakout to new highs. The real positive is that the NASDAQ volume was above average. The negative is that volume was lower than the session before. And if you look at the New York Stock Exchange, actually, I got to bring up the Russell 2000 on MarketSmith. If you look at Russell 2000, and then if you look at the Dow Jones Industrial Average, you can see that volume came in lower on all of these exchanges. But overall, the price action is all that matters. Lower volume has never mattered in these uptrends since 2008. Why in the hell should they matter now? So with the way all of our indexes look, it's about as good as it gets, guys. I'd like to be more excited, more stoked, if you will, on the overall uptrend, but it's just a solid uptrend with great leadership. But I'm still, I'm like, where are my hot, beautiful charts? It doesn't matter. We're already fully invested. I got no cash left in the cash account. Margin account, we're fully on margin. So all the new long positions, all the ad signals, we're on margin. But the problem is just that you would think that with the market looking as solid as it is, I would have some beautiful or hot charts everywhere. But really, some of my best setups right now, CRMD. This would be considered a hot chart if this stock was about basing for about another 2-3 weeks, if it was still flat. If it keeps this max green bop the whole way in the next 2-3 weeks and then breaks out, that's a hot chart. So that's, a setup for a hot chart. But $3 stock, and then this could be a hot chart maybe later on. But see, it's basically all the hot charts are all about the max green bop and all the solid bop. And I tell you what, we don't have a lot of stocks that look like these two with the max green bop, the huge accumulation, and positive price action. But what we do have is extremely strong leadership across the board, and then more importantly, confirming oscillators in the indexes. The leading stocks is what's more important, but look at our oscillators. Wilder's RSI steadily trending higher. Short term, the stochastics trending higher. And what's weird is that my 20-10-10 stochastics on the Telechart free stock charts looks way different than the other ones. I mean, they look the exact same, but while these are overbought here, mine are not overbought. They look like TSV, MACD, and Wilder's RSI, and I'll show you on my Telechart. But TSV also uptrending, MACD uptrending, and as you can see in every index, you see the same thing. Here's the S&P 500. Look at all four of those oscillators trending higher. NASDAQ, all four of those oscillators trending higher. NASDAQ 100 index, all four oscillators trending higher. Dow Jones Industrial Average, all four oscillators trending higher. But getting back here, I wanted to show you where we're not overbought at. The Russell 2000 looking a little bit more overbought. I think maybe my charts just updated on me because it wasn't looking like that just a little while ago. So now it's starting to get a little bit overbought. NASDAQ, there we go. Okay, so I think that's what it is. This was okay, so now it looks more in sync. So that's great. Okay, so the bottom line is every oscillator is in an uptrend. Everything looks great. I'm glad that those have updated because those were whacked out on my charts earlier, and now everything is in complete confirmation. But remember, just because stochastics are overbought doesn't mean the market needs to turn down. Overbought can stay overbought for a very long time. Let's go back and look at stochastics. You can see back up here the last time it got overbought, it stayed overbought while we rallied even higher in November before eventually pulling back. And since we don't have the moving average coming close to crossing over yet, there is no reason to be alarmed by that overboughtness just yet. Now, when it comes to the individual stocks, we did have a few sells, but I'm already out of two of these. TMF gave a 50% sell signal by it breaking down below the 50-day moving average. And once again, this just goes to a problem of big gains just get wiped out when things crash too much. This thing was up 51% for us at one point before we started to finally take profits. We already lost it down to like around 29%, and now we're down to 21%. So at least we're still taking profits on TMF, but that's definitely a 50% sell with the heavier volume close below the 50-day moving average. And with so many great stocks out there, there's no point to hold on to laggards. And then also we have FMD as a full sell. This one basically was a very, very, very tiny position. This one into the speculative accounts. But in the speculative accounts, if you did take it, it's a full sell already. 545. 545 was where my intraday sell stop was. It obviously hit it. Went much lower intraday and is brought back to 545, but there's no way you should hold this stock at all now, considering that we went long this stock back in December and it's done nothing. But it was a small position, so it doesn't matter. What really mattered is AMBA. This is why sell stops. Once again, I love them more than I hate them normally, and this is why. AMBA, we got lucky following the long signal. We got a good fill. The very next day, half of my position was taken off with us getting below the 55.25 level. But we went ahead and had half that position left. But with a, let's see, where was it at? The breaking down here by it intraday, trading below, I believe it would have been 54.32. I was knocked out as it traded below 54.32 on the 12th. But on an end-of-day basis, there is no sell signal. But I'm already out of AMBA. Now on an end-of-day basis, we have a full sell signal. But once again, the stop saved me. I'm out at 54.23 instead of coming in at the end of the day and seeing now that it's at 50.71 and getting out. And once again, saving yourself money and not losing money is more important than holding on whenever you have a loss and hoping for huge gains. It's not just worth it. So AMBA, FMD, full sells, TMF, half sell. But AMBA, FMD, I'm already out. TMF, got to take that 50% off. We do have some new long positions, and they are all great. However, the problem is I'm already fully invested in the cash account. So I'm going to split up my long position between two leading stocks, Wage and EW. This is Wage, this is EW. They are both high-quality, CanSlim stocks, high-price stocks. Wage is in the pre-perfect speculator scan. EW has been a perfect speculator scan stock for quite a while. Only 45 stocks out of 10,000 qualify for this scan, so it's a big deal. And the one Wage is in, currently I think it's about 85 stocks qualify out of 10,000. Wage is up a little bit more than EW. EW, CanSlim, perfect speculator, so 2.5% position each for both of those. I'm giving 5%, especially since we only risk about 2-3% fully if we're wrong, but by the time it hits our sell stops. And then Wage, 2.5% for the CanSlim scan, 2.5% for perfect speculator scan. And technically it would be another 1% because it was also in my price, price, volume, BOP surge scan, as you can see, going in just one day. Price, volume, and BOP surges. So it technically should be a 6% position, but since the stock is giving us, before we know that we're wrong, a 6% risk in the stock, it's going to remain a 5% position, and I recommend having half of it sold off if it gets below 60. With the surge in price, volume, and BOP in this market, it definitely shouldn't get below 60. And then also two ad signals in a stock. Both stocks are CanSlim quality and perfect speculator scan stocks. LNKD is giving an ad signal with the heavy volume move here. Intraday reversal, closing near the highs, closing higher than where it opened on heavier volume compared to the previous 2 days. And volume's been contracting ever since that gap up, so that's perfect. And BOP is staying right about the same. Bottom line, it's still green, very tight pattern. LinkedIn looks like it might want to explode higher. And then CBPO is giving another ad signal. The stock's in a big uptrend. Very, 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 very tight, flat price pattern right now. Coiling possibly for a breakout to new highs right off 50-day moving average with another pocket pivot point signal. It's a very, very bullish looking stock. I only have one issue. BOP should be increasing, not decreasing, as we see these accumulation and pocket pivot point signals. And then there is one quote speculative long position, but it's not. It's high quality, and that's why I'm giving it out on the gold section. This is a CanSlim quality stock, HPJ, that is also in my price volume BOP scan. You can see here price surges, volume surges, and BOP is higher than the day before instead of falling from the day before, which is weird whenever you rally on huge volume, but that's been happening a lot in this QE environment. So HPJ, nice continuation bounce off the 200-day moving average. Yesterday, you'll see in my new positions page, I flagged it. It was going to be a long position. I passed on it, though, for the biggest reason is because volume wasn't really surging, and I couldn't, with our new long positions, I was already fully invested, and I had a Melly long position, and I can't remember what the ad was, but then there was the ad position. So HPJ, with the lack of volume and especially with BOP decreasing, wasn't of interest. But now with BOP increasing to a higher green level, volume surge, and a price confirmation of the previous day's move, HPJ is definitely a long. In my cash account, though, I won't be able to take it, but in the margin account, I'll be able to take it. Can Slim position, since it's under $10, I do like 1.25%. But since it's also in the price, volume, and BOP surge, it's another 1.25% for a total of 2.5% position. The CBPO ad and LinkedIn ad are obviously 2.5% positions. In the cash account, they won't go. Only Wage and EW will.